Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is Morning Forex Technical Report. Today's date is February 23rd, 2023. This is in this morning report, I'm going to take a look at some of the technicals that are driving the markets, including the risk-defining levels, the bias-defining levels, the targets, all those sorts of things in some of the major currency pairs. So let's get into it. We did see U.S. GDP come out weaker. This is for the fourth quarter, however, and we saw stronger inflation readings from that report, initial jobless claims. This is the week for the BLS survey, and it came out lower than expectations with initial jobless claims coming in at 192,000. They're expecting 200,000. That number below the 200,000 implies that the BLS employment report for next month, the non-farm payroll report, will continue to show some added strength. So we're not out of the woods as far as employment goes, and that means the Fed's still in play. The expectations for a 50 basis point hike is up to around 20% at the next meeting. The terminal rate is up to around 5.35%. So let's get into the technicals here that are driving the market. We'll start with the euro versus US dollar. And if we look at this currency pair, what we've seen, of course, the same old story, is resistance against a 200-hour moving average. And in trading yesterday, we found a resistance against the lower 100-hour moving average, stay below that moving average. That moving average currently comes in at 1.06539. Ultimately, we're going to need to get above both 100 and 200-hour moving average to get more bullish bias for this currency pair. And until then, the bias remains more to the downside. And you can see we are in a little channel here. Admittedly, the ranges for these currency for the euro versus US dollar is not all that great, but we are maintaining ourselves within this channel just below the 106 level, 105.99 as we speak. The top side trend line looks like it comes in right around the 106.23 level, and on the downside, if we move further to the downside, it's running away from us because it's downward sloping. Of course, that comes in around the 105.67-ish type area currently, and moving to the downside. So break below the 105.85 level, and we open the door for and move toward the lower end of this channel that we're in the euro versus US dollar. Let's take a look at the daily chart. And if you look at the daily chart here, we have a number of different swing levels that are in play, and the market is within that swing area through here. These are the levels in that form this swing area going back in time, and had support here, fell below it here for 4 days, and then bounced back to the upside. And as you can see, we're back in that level. 105.73 is that level, and that more or less corresponds with our lower channel trend line here, 105.67. So be aware of that on further downside momentum in the euro versus US dollar. Right now, we are right around the 106 level, looking toward the low price from earlier today. 105.85 is the next target for the euro versus US dollar. Taking a look at the dollar versus yen, I'm going to put it on the hourly chart here. And if we look at the this currency pair, what we've seen over this consolidation here, I could put probably a red box around this area where the market's been moving more or less to the upside and downside, but we have a ceiling here, and we're actually breaking above that ceiling as we speak. The high prices came in at 135.11, 135.22, and as you can see, the price is moving above that level, 135.27. What we see here, keeping the bullish bias, is the 100-hour moving average, doing a pretty good job of holding support. Admittedly, in trading yesterday, we did move a little bit below that level and below the swing area, but the market has since rotated to the upside. And the modest trading range in here today is being extended as we speak to the upside. So there's room to roam, and we're above the 100-hour moving average. So things are looking good still for the dollar versus yen as the dollar moves higher, and expectations of stronger Fed policy. Taking a look at the daily chart, you can see the rotation to the upside here after bottoming in December. We see moving above this swing area here, where really in most recent time we found some support buyers here and here and here, and resistance sellers here and here and here and here. And we tried to stay below it here in the last four or five trading days. The market's been trading a little bit above it, a little bit below it. But in trading here today, we're trying to stay above the 134.75 level, and that's giving the pair a little bit more of a boost. Do we move toward the 38.2% retracement toward the 200, 100-day moving average? Seems that way right now. As long as the price can remain above the 134.75 level, I'd say that would be the path of least resistance here for the dollar versus yen. So be aware of that. Let's take a look at the sterling versus US dollar next. And this currency pair, put the Fibonacci from this high to this low. The 38.2% retracement was broken in earlier this week on a number of different occasions, but we had lower highs through here, and the market started to rotate back to the downside. We did fall below the 100-hour moving average after finding support near it yesterday, and the price moved down to this swing area down through here, where again, we can outline a number of different levels of that this area, why this area was defined at this level, and in trading here today, the market moved down to the top of that level, around the 120.10 level. It's also around the 120 level, which is a nice little round number for that currency pair. So we've seen it bounce back to the upside, and we came back within the 100 and 200-hour moving average here, only to find sellers currently trading 120.23. So we have a battle going on between the moving average on the top side, swing area on the downside for the sterling versus US dollar. Pay attention to that. Finally, take a look at the Aussie versus US dollar. What's significant in this currency pair is that the price is moving back down toward the 200-day moving average. Yesterday, the price fell below that 200-day moving average and quickly rebounded back to the upside, moving higher in early trading here today. Now we're going back down toward that level. A lot of times you see a failed break and then a retrace back toward the area. And you often find support buyers against that level because the stop is defined at 0.6794. So we'll be watching this 200-day moving average at 0.6803 to see if it can hold and push the price back up to the upside from a technical perspective. 0.68337 would be the target to get to and through on the top side. We'll see how that pans out. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.